Hi, my name's Simon Thorpe, and I want to tell you about my proposition for a 000.x plan. It's a radical plan to replace current taxes with a financial transaction tax. So we'd have 0% income tax, 0% taxes on profits such as corporation tax, 0% taxes on sales, VAT in Europe, and replace the whole lot with a flat rate financial transaction tax on all transactions that would be well below 1%. Before talking about it, let's talk about what might be the features of an ideal tax system. We want one essentially that's fair. The current tax system clearly isn't. Many people actually pay no income tax, but it's not necessarily the people with the low incomes that pay no tax. It's those who can be quite wealthy but have ways of using tax loopholes to get out of paying tax. Multinationals such as Google actually avoid paying taxes as well by using offshore tax havens. And the financial sector pays very little tax as well. We want a system which is painless, which doesn't require filling in tax returns and everything. People hate doing that. We want a system which is difficult to cheat. Currently the tax evasion or optimization industry costs billions of pounds in lost revenue by people avoiding paying tax. And we want a system which is cheap to implement because tax collection is actually very expensive. I believe that a financial transaction tax would well be an option because it fits all four of these things. Financial transaction taxes have been proposed by many people, including, for instance, Nicolas Sarkozy, the European Commission, the Robin Hood tax movement, and Europeans for Financial Reform, all of whom are proposing relatively low transaction taxes around 0.05 or 0.1%. The trouble is that currently these ideas are getting nowhere because the lobbying power of the financial sector is preventing implementation. Essentially the problem is because financial transaction taxes are seen as a punishment for the banking system rather than as a solution. And I think the solution actually is to combine the introduction of a financial transaction tax with the abolition of other taxes. It's an idea that I proposed in a paper I wrote in October 2010. The basic idea is that we need to know what the level of financial transactions is. There are not many places where you can find numbers on this, but one is the Bank for International Settlements, which produces an annual report. The figures for 2010 came out in January 2012. The whole publication is some 558 pages. You can get the comparative tables data for the 23 countries that are covered by the report in an Excel format. Surprisingly, people don't use those figures to actually calculate the total transactions. That's something that I did recently. So, for instance, for the USA, here are the data that I extracted from the B.I.S. data set. Numbers are in billions of dollars, and you can see that in 2008 the total was some $3,452 trillion. The number dropped a bit in 2009 and has been creeping back up. I suspect it's going to be around at least 3,000 trillion a year in 2011. If we compare that with the total tax revenue for the USA, which is standing at $2.25 trillion, we can see that the ratio between these two numbers is huge, 1,270 times more transactions than tax revenue, which means that you could, in principle, replace all of the current taxes in the USA by a financial transaction tax of just 0.08%. Of course, that actually assumes that introducing the tax would not have a major effect on the level of transactions, and that's certainly a debatable point. Nevertheless, if you take the figures for all 23 countries, and I'm using a figure here, the one in red for the United Kingdom is a one that I've calculated myself because the B.I.S. figures for 2010 lack all the figures for a major player, which is LCH ClearNet Limited. And here I'm using the numbers also for the GDP for the 23 countries, the revenue, tax revenue as a percentage of the GDP, and the revenue in billions for each country. And by this we can work out what the level of tax needed to replace the financial transaction tax needed to replace the current taxes. And you can see there are 3 countries, United States, United Kingdom and Belgium, where you could get away with a tax below 0.1%. But even over the whole group of 23 countries, if you look at the figure at the bottom, the average is only 0.168%. So this is clearly a viable option, I think, for replacing the current tax system. I have another specific proposition, which is that the implementation would use a variable rate financial transaction tax, one which is automatically adjusted to the rate so that the revenue matches the expenditure, government expenditure. And this is actually a way of implementing the golden rule. So each country would adopt a slightly different rate of taxation in order to balance their expenditure and possibly pay off national debt over a fixed period. In all cases, when you make a transfer from one place to another, 50% of the tax is paid by the sender, 50% paid by the receiver, and transfers from tax havens could be zero rated to encourage money to be brought back into the economy from tax havens like the Cayman Islands. And you could have transfers to tax havens being double taxed to discourage that sort of thing. There are lots of advantages of such a system. One is that it's painless. People wouldn't even know they were paying the taxes. It would just automatically be paid whenever they make a transaction. So no paperwork, no tax returns to fill in. Be extremely cheap to implement because it's just literally putting a line of code in the software that does the handling the transactions in the clearing banks. So you don't need a tax authority to collect the money. It would be extremely difficult to cheat because you just, when you make the transaction, there's no way of not paying the tax. So very, very difficult to avoid. It would completely eliminate the piles of loopholes and what we call niche fiscale in France, where people have been lobbying to get tax breaks. These would no longer exist because there's no people not paying taxes. You can't have a tax break if you're not paying taxes. And this would essentially eliminate corruption of politicians. The hundreds of lobbyists in the US who are trying to convince every representative that their particular client needs a tax break. This would just end. And state support for particular sectors would no longer be like agriculture and industry, would be no longer possible on the basis of tax breaks. It would have to be actual direct subsidies, and that's a lot harder to argue for. It would eliminate money laundering and other illegal practices, and it would provide a completely level playing field. Currently, multinationals have an enormous advantage because they can get away with paying essentially very low levels of tax by declaring their profits wherever it's most optimal to do it. That's not something you can do if you're a nationally based company, and that unlevel playing field is something that would be very usefully removed from this. What are the problems? Well, one is that you could claim that people could use cash to avoid paying the tax. I think this is actually a minor problem. Cash payments are really only a tiny fraction of transactions. It's just too risky to go around with large amounts of cash in your pocket. You could actually discourage use of cash by having a higher tax on cash withdrawals. So if it was 0.1% on electronic transactions, you could have a 0.5% tax on cash withdrawals. That would discourage that. But you could also switch to a cash-free economy. In France, we have things called Moneo cards, which are sort of rechargeable credit cards that you can fill up in a distributor machine, and you can use those to buy, bread and newspapers and so on. You could also use mobile phones in the future to make transactions. You wave your mobile phone at the cash register and it debits your account automatically. So, if you wanted to, in a few years, we could actually get rid of cash transactions completely. But there's another thing you can do, which is to pass legislation such that only electronically validated transactions are legally binding. If you bought a car, for instance, for €10,000, but you paid it in cash, it wouldn't be your car. This is actually precisely how the stamp duty on UK share trading works. If you want to buy shares in a UK company, you have to pay a 0.5% transaction tax, stamp duty, otherwise the shares don't belong to you. Some people claim that this will only ever work if you have global agreement. that's absolutely not the case. The fact is that one country on its own could do it, because the first country to do this, to abolish, for instance, corporation tax, would have an enormous advantage, because that country would be a great place to move the trillions of dollars currently hidden in tax havens, because they would be legally brought back into the system. Many companies would want to relocate their head offices in that country so that they could declare their profits legally and then use them. And with no income tax, no health and employment charges and so on, it would be cheaper to manufacture goods in such a country. So who's going to lose out on this? Accountants. You won't need accountants to do your tax returns anymore. You won't need tax consultants, because there's no way to avoid this. People employed by the government tax services would have to find something else to do. And it's clear that speculators and high-frequency traders would have to change their tactics. They would no longer be able to make money on transactions that only made a few 0.001% profit. But it's not making speculation illegal. It just makes the rules a little bit different. A particularly important thing is that multinationals and corporations who currently have an unfair advantage would lose that advantage, and I think that's just right. So if it's such a good idea, why hasn't it been done already? Well, I think one reason is it simply wasn't possible until recently, and it's only in the last few decades that electronic transactions have become widespread. Previously, it was far more efficient to only tax profits, because that way the paperwork was reduced, but that's not true anymore. Obviously, the other reason is that the massive lobbying power of the financial sector has managed to stop people using this sort of idea, because they see an FTT as interference in their ability to do it, free markets and so on. But I think, since governments could trade the introduction of an FTT in exchange for the abolition of existing taxes, even these people would probably have to agree that it's a good idea. One interesting point is whether this idea is left-wing or right-wing. Actually, I think it's neither. It's politically neutral. It all depends on how the government uses the revenue. If the government decides to use lots of the revenue for pensions, social services, health, education, public transport and energy, that's pretty much a left-wing government. But if they decide to reduce state expenditure and rely more on private enterprise, then that's more right-wing. It has nothing to do with the way you actually raise the taxes. So in conclusion, I think actually there are very few arguments for preserving the current tax system, which is completely discredited, very inefficient and very unfair. And I think there's a very strong case for replacing the whole lot by a simple and fair financial transaction tax, and I think that would be an excellent move. I'll be very interested to know if there are people out there listening to this who share my view that this would be something that we should be doing now. Let's do it.